Welcome everyone. We'll begin our session shortly. I see a few more attendees coming in, so we'll wait for 30 more seconds before we start. Thank you for your patience. All right then. Hello everyone. I am Vivek Gopal Puria, Director of Product Marketing at Replicon. I welcome you all to this session that deals with how businesses can plan and maximize their R&D tax credit claims in the US. We are joined today by Lloyd Lobo from Boast Capital, and their team excels at helping businesses with R&D tax credit claims. Hey Lloyd, over to you for a quick introduction.
Hey, thanks for that. Thanks for having me on the webinar. Again, I'm Lloyd Lobo. I'm the co-founder of Boast Capital. I have a background in engineering, software engineering to be specific, and our firm is a combination of engineers, CPAs, and we have our own software that we use to help companies prepare and maximize and defend R&D tax claims with the IRS and, of course, also the Canada Revenue Agency. We work with over 300 customers on both sides of the border, and we specialize in all kinds of tech claims from software to agriculture.
Sounds good. Let us quickly look at the agenda for the day. We'll look at what the R&D tax credit program is all about, what the benefits to businesses are. We'll quickly discuss the qualification criteria, IRS requirements, and do's and don'ts. We'll also talk about a few customers who were able to gear up and gain from the program. We'll wrap it up with a quick Q&A session at the end. Before we start, a couple of housekeeping items. All of you are on mute during the session. Q&A will be held at the end of the webinar, but you can ask your questions at any time using the questions box. We also have a poll during the presentation, and your response is highly appreciated. Okay, then let's dive right in. Before we begin, we'll start off with a quick overview of who we are. Replicon is the global leader in enterprise time management. Our aim is to help businesses track, manage, and optimize their employees' time to grow profitably. Our product is trusted by over 4,000 customers worldwide to manage their workforce. We provided business with real-time visibility into employee time and attendance, projects, clients' billing, to enable them to take decisions as needed. One of the common use cases that we see amongst our client base is utilizing Replicon for tracking projects and for managing R&D tax credits. We will talk about how one of our customers uses our solutions in one of the later slides, but for now, let's look at what R&D tax credits is all about. Over to you, Lloyd.
Thanks for that. So there's a lot of confusion around the R&D tax credit program, and I hope to answer some of those questions and make it easier to understand the program. So the R&D tax credit program has been around since the 80s, and previously, prior to 2015, it would expire every year or so, and states had to reapply for it. It was made permanent by the Congress in 2015. And the purpose of this program is to encourage innovation in the United States. So the credits you get is towards US labor, US subcontractors. So how can you use the credits? There's a few ways you can use the credits. If you're In a taxable position, you can carry it back to the previous year and get a refund. You can offset income taxes you owe in the current year, or you can carry it forward 20 years. Now, a lot of SMBs are not profitable, or they're deciding to not be, or they've made a decision to not be profitable for the foreseeable future, especially if you're a venture-backed company. So if you're not profitable, you can use the R&D credits from 1 year to offset Social Security taxes you owe. Now, to give you some context around what that might be, businesses are required to pay 6.2% of each employee's salary up to $118,000 as Social Security tax. So let's say you have an annual overall company payroll of $4 million. You're paying roughly $250,000, $248,000 in Social Security taxes. That's what you'll owe. So you could use that R&D credits to offset Social Security taxes you owe of up to $250,000 a year. The criteria for that is you should have had revenues for 5 years or less from the tax year, and your revenues for the tax year should be less than $5 million. So let's say you're claiming for fiscal year 2016, and you shouldn't have had reported revenues before 2012, and your revenue or gross receipts for fiscal 2016 should not be more than $5 million. Then you can use the R&D credits from 2016 towards Social Security taxes you owe in 2017 and beyond. If you're not profitable, you could also use it to offset alternative minimum taxes, and the criteria for that is less than $50 million in average revenue for 3 preceding years. It's a complicated calculation to figure out the AMT, so I would recommend checking with your accountant what your AMT is. Now, chances are if you're not profitable and you have loss carry forwards, then you're not going to owe any AMT anyway. But if you're not profitable and you have loss carry forwards, you'll still owe Social Security taxes, and the Social Security taxes are collected on each paycheck by a payroll provider, but then they pay it to the IRS once a quarter on a Form 941. So you're paying that anyway. So if you're not profitable and you can't do the AMT offset, then Social Security taxes is your best bet. Applicable industries, we work with companies all over. We have, like I said, software companies, companies that are in oil and gas and agriculture and everything in between, in the food industry, coming up with different recipes to maintain a certain taste profile and so on. So it really doesn't matter as long as you're developing new technologies or products or materials, or improving existing technologies, products, or materials. And it's in one of the field of sciences. So what can you claim? You can claim U.S. employee salaries, like I mentioned. You can claim subcontractor costs, and you can claim materials consumed in R&D. So materials consumed might be things that you use for prototyping purposes that you're not commercially selling. So that could be even equipment that you've acquired for purposes of just R&D, acquired or leased for just purposes of R&D. It could also be things like hosting costs on AWS if it's entirely used for R&D. It could be computer equipment that was leased, or it could be just materials that you used to build a prototype and you scrapped a ton. So how much can you recover? There's a number of ways to calculate this, but the net of it is, if you are a first-time claimant, or you have consistent expenditures over a 3-year period, you're looking at about 10% from federal. And the federal credits can be used to offset Social Security taxes. From a state, the state differs from state to state. Let's look at California. It's 15% of the half of the R&D expenditures over the past 3 years. So it works out to roughly 7.5%. The California credits can't be used, you cannot use them to offset Social Security taxes, so you're only looking at carrying them forward to offset income taxes owing. and the California credits can be carried forward indefinitely. Now, Washington State doesn't have a state R&D tax credit program. Arizona has a state R&D tax credit program that's refundable. So you get 24% of your R&D spend up to $2.5 million, and 75% of that could be refundable, provided you apply within a certain amount of time. So it differs from state to state, and I can look that up if you provide me like the state you're in. But the key thing is getting that federal 10% to offset Social Security taxes or income taxes. So how do you qualify? There's a few main criteria here. The first thing is developing new technology or improving existing technology. The second criteria, which is the key criteria, if you don't hit this, then you really don't have a claim. The second criteria is overcoming technological uncertainties. So en route to advancing your company's knowledge base or developing this new technology or product, you face some major technological uncertainties or challenges that you could not resolve by finding an openly available solution. So if you're a software company, you can find publicly available code or read a research paper or use an open API to just plug in. So you had to come up with your own hypothesis and iterate to the end outcome. And that's your systematic process. And then technological in nature is in the field of sciences, whether it's computers or biology and so on. So a few questions to ask yourself as you think back in the previous year, thinking through 2016, you want to think through what were the biggest features or technologies we pushed out or built, and what were the biggest challenges? What kept us up at night? What were the biggest headaches that stopped us from pushing things out or shipping product out within the timeline that took us long, right? What were some of the technological challenges that couldn't be removed by standard practice? Then what was it? What was the procedure you used consistent with? Like you came up with the hypothesis and you tested it and you figured out what worked or didn't work, and then you modified that and you essentially iterated to the end outcome. And the other question to ask yourself is, did it result in an advancement of technological knowledge for your company? Now, this doesn't matter if your competitor across the street is doing the same thing. The competitor is not telling you how to do it. So what matters is how you're advancing your company's knowledge base by overcoming these challenges that you can't find answers to in the public domain. And so success or failure doesn't matter. You could have tried something and that project completely failed, but you wasted a lot of time, and that's fine. And the last piece we'll talk about in later slides is, did you keep a record of the work you've done, right, of the R&D and of the results as they progressed? So let's look at a case study right here. We're working with a software startup in California. We've got 7 developers, 6 back-end, 1 front-end, and salaries are averaging $150K per year. Now, front-end work typically does not qualify, especially the more unless the work was done to write interfaces in support of testing some of the technological uncertainties. So you had to write a way to test a user interface to test some of the results, and it was done directly in support of. But otherwise, typically it does not qualify. So they had about $840K in expenditure pool, and they had been claiming before, and their expenses were going down. So they only qualified for about $50,000 from federal and about $63,000 from California. Now, had they been a first-time claimant, or if they had consistent R&D spend, then that could have been $84,000 from federal to offset Social Security taxes. So when do you want to claim? For the purposes of the Social Security offset, the R&D tax credit needs to be specified, elected, and filed on the original tax return. So that means if you're claiming for fiscal year 2016, then you need to file by your original deadline. If you're a C Corp with a December year end, then that deadline is April 15th, or if you filed a 6-month extension, it's October 15th. You want to file it within that deadline. Now, just for the fiscal year 2016, because the Social Security offset is a new ruling, the IRS has a one-time extension, another extension, which is even if you miss the April deadline or the October deadline, say if you're a C Corp with a December year end, you can still file before December 31st, 2017. If you file after that, you cannot use the credits to offset Social Security taxes. You can only use it to offset income taxes. So I would say you have a few months to get this in. So one of the key requirements here is technical documentation, because it's very difficult to jog your memory when you sit there and try to prepare this claim. How do you determine what percentage of your engineering spend was R&D as it meets the IRS's criteria of overcoming technological challenges? So documenting work that was completed is key here. And what you want to do is anytime you encounter major technological challenges, you want to flag it in your project management system as R&D or R&D for R&D tax credit. And you want to highlight some of the major tech challenges. That way, when you're at year end and you review those flags, then you know exactly what happened and you can capture the maximum possible time. So like I had mentioned, you got to capture the problem and the iterations as you went through them, different hypotheses that were tested, test results. You don't have to capture every nitty-gritty. What you want to do is capture the major tech challenges encountered by the team in a given month or a quarter on a project-by-project basis, not every little problem. Time tracking, again, you can track time by project and activity, but if you're using a solution that does a point-based system, then we can correlate those points to time spent. And if you have no system, then I recommend using Excel and create either monthly or quarterly timesheets based on the projects people worked on and the time spent on core engineering versus QA versus testing versus project management. So if the IRS does audit you, they know that you're not submitting vaporware, that you have backup documentation. Let's say you had $2.5 million in qualified R&D spend. That's $250,000 by the IRS. So that's $250,000 in federal R&D credits. And chances of you getting audited by the IRS are quite good. And so if you get those credits and the IRS audits you, they're going to want to see what was the backup documentation you have in place. Why did you claim this, right? And it's not vaporware. And when the IRS audits you, more than likely they'll send an engineer. So you don't want to drag your engineers into this audit. So time tracking and keeping documentation in place and having everything in check is key to making sure you get the money and not waste your time. So I'll pass it now to Replicon to share a customer case study.
Thanks, Lloyd. Let us look at one of Replicon's customers, Blackbaud, and see how they were able to streamline their processes around R&D tax credits. Most of you would probably know Blackbaud. They are a go-to solution provider for nonprofits. They provide everything from grant management software to ERPs for not-for-profit organizations. They actually spend a lot of time and money in making their solutions better, so they're doing a lot of R&D. So previously they were using a legacy solution for managing some of their projects, and they were running into issues. The solution was not able to scale up to their expectations, and then they were having problems with the project data accuracy. They felt that the overall process was cumbersome, and then they lacked any kind of insight into the product investments that were being made and how much of it was actually being spent on R&D specific work. So their R&D organization head decided that they needed a better solution for project tracking and also tracking their R&D projects, and Replicon was a great fit for them. They were able to easily attribute all the project time to both R&D and non-R&D work in an effective manner. And with Replicon, they got better at managing their project resources. They realized benefits of accurate, real-time, actionable insights. We also have other customers who have gained similarly from managing R&D projects with Replicon. In fact, Replicon uses its own solution to manage some of the R&D tax credits that we claim. Well, that's that. Back to you, Lloyd.
Yeah, so IRS review. So let's keep in mind that the IRS R&D tax review is not a tax audit, unless you're doing some kind of fraud and claiming frivolous things. It's not going to call it a tax audit. So they would either do a technical audit to review your documentation and get an overview or get a better sense of why you claim these projects, or they would do a financial audit, or they would do a full technical and financial audit. On the financial side, they just want to make sure the invoices or the things that you claim match up with what was actually paid out. So a few questions, maybe there's a poll here. What are your top 3 challenges when it comes to maximizing your R&D credits? Or if you have any questions, now is the time to punch it in the chat window here.
You will see the poll on your screens now. You have about 30 seconds to respond, and your response is highly appreciated. So, what do you think, Lloyd? What would be the winner here? I think option 5 is a big bet that I would make. What would you think?
I'll tell you from we work with over 300 companies, and I'll tell you generally what happens. The first thing is I don't know what to claim, right? I don't know what qualifies and what doesn't. And usually what companies will do is they'll work with their accountant, and accountants are not engineers, so they don't know as well what to claim and what not, and how to maximize your claims without chewing up a lot of time from your engineers. So they either you could do one thing is claim everything and then call for an audit and basically get reduced significantly, or you claim what qualifies. So I think the key thing is a lot of people are not sure what to claim. The other thing is people spend a lot of time trying to do documentation and time tracking, and that creates you don't want your team to focus on creating R&D claims and documentation for these claims. You want them to run their business as they run it and be able to use that. So that's another thing. And then just the overall administrative overhead is also key, right? Trying to figure out what qualifies and what doesn't, doing documentation, that comes under overhead. And then also a lot of companies, they start preparing reports and documentation to substantiate what they claim themselves, and which takes up a lot of time. So I would say there's different areas, all of them are quite valid and chews up a lot of time, but it all also depends on who it's impacting. If it's an engineer, you don't want your engineering team focusing on administrative overhead for R&D claims or preparing for audits, right? And then if it's a finance person, then you're unsure what to claim. That's the key thing. So documentation challenges came up as 100% as the winner.
Yeah, interesting results, yeah.
Great stuff. So final few slides here, some of the do's and don'ts of the R&D claim is one, pay yourself and staff. This is quite obvious. Document and track, document activities and track your time. And the incorporated company is also quite obvious, but we see a lot of early stage companies that are paying expenses and so on, but they haven't incorporated. And the last thing is verify your PEO arrangement. So a lot of SMBs and even larger companies will use a professional employment organization like a TriNet or an ADP. And what these organizations do is, it's very beneficial what they do. They assume all your overhead around health and HR services and so on. And that way you don't have to deal with different health providers, HR providers, and they manage the whole thing, and it's greatly beneficial. But what happens is the PEO becomes the employer of record on your employees' pay stubs, right? They're the EIN on your employees' pay stubs. It's all fine and great for R&D credits in the sense you can still claim R&D credits, but if you're using R&D credits to offset Social Security taxes, then the PEO has to do this offset because the PEO pays Social Security taxes. You don't pay Social Security taxes. So the PEO is going to have to do a Social Security offset and then give you back the money. The problem is, though, you need to be a certified PEO or professional employment organization by the IRS, and there's a whole bunch of PEOs that are not certified. And if any of you are in a PEO situation, feel free to punch it in the type it in the chat window or send me an email, and I'm happy to share the IRS's link of certified PEOs, because your PEO might not be certified and you could be losing up to $250,000 a year in cash benefit because you can't use the R&D credits. The don'ts are, back to documentation. Don't underestimate the importance of documentation. Don't focus on the business opportunity. This is key because a lot of people say, yeah, we're doing R&D, we're pushed out this feature, or it's groundbreaking, it's never been done before. The IRS doesn't care about that. What they care about is what was the underlying technology you built to overcome some major challenges that were stopping you from pushing these features out. So I wanted to get this feature out, and or say let's take a sample example. I wanted to integrate with this third-party system, and nobody had ever integrated with before. They don't have an open API. They have no documentation. Well, those created challenges, so you had to come up with your own hypothesis and iterate to create that connector. That's what they care about, is what was the underlying technology. They don't care about is like, hey, we integrated with the system and no one has ever integrated before, and because of that, it creates all these downstream benefits for my clients. They don't care about that. And the last thing is, don't leave your R&D claims until the last minute. And that is important because if it's the first time you're claiming and you wait until the end of the year, then you're leaving it to your CTO or your engineering team's memory to jog what was done. And it's very hard to go back and remember. You can remember some big things, but it's hard to remember smaller things. And that way you're leaving money on the table. So I would recommend getting on it early and being proactive with it. And that's precisely how we work. We work with a lot of companies on a proactive basis. We integrate with different systems that they use, pull this data in, and we're working on these R&D claims proactively. We're making sense of their existing documentation, either from email or project management systems and so on. So they have everything in place, and we prepare this claim and it's ready if there's an audit. And you're not waiting until